We're glad to have you back. According to the United Nations World Economic Situation and Prospects, global economic growth is projected to slow from an estimated 2.7% in 2023 to 2.4% in 2024, trending below the pre-pandemic growth rate of 3%. Growth in the global economy has slowed sharply, and the risk of financial stress in emerging markets and developing economies is intensifying amidst geopolitical tensions. Investment and financial advisor, Mr. Gbenga Ogurinola, is joining me from the United Kingdom to talk more on this. Thank you so much. It's really good to see you. How are you today, Mr. Ogurinola?
Thank you, Tolu. It's nice to be here again today, and a happy new year.
Yeah, we should the same. Well, let's look at how the new year is starting up with all of the contending issues, geopolitical tensions we've had before the new year, the impact on crude oil prices, the impact on stock markets. What is your take? Before I want to stay a bit with the United Kingdom, but what's your overview of all of this and how it will shape activities in 2024?
Well, in the United Kingdom, I think it's something that's been taken not so much in a way that it's affected the economy negatively. Even though if we look at the year 2023, we'll discover that most economies were able to finish the year in a relatively good note. I'll put it that way. Because when we look at the way the year started, a lot of economies had very large inflations, almost on a two-digit figure. The interest rates were galloping and trying to match up with the inflation. And towards the end of the year, they were able to reduce the inflation mostly by half. And I think that has kind of helped to stabilize most of the economies generally. The price of crude and energy too has relatively reduced. So that has also helped to kind of cushion the effect of that we normally have during this period of the year where there are high energy prices. So that has kind of helped to cushion that in the UK. But moving generally to the global economy, like you said at the introduction, that the projection for 2023, 2024, I mean, was that because of the COVID era, I mean, we are moving to an era where we have less than 3% growth in the economy. It's still going to likely be like that, moving forward in the year 2024, because of a lot of issues that the world has to face. Looking first at the political terrain, where you have the crisis in the Middle East, it's still relatively very delicate, and we don't know what would happen because those areas are very volatile, and anything can happen in those areas. We also have a lot of electioneering processes going to happen in the year 2024. Many nations would go into the general election in the year 2024, and all that, they have the way they impact the world economy. So it's really hard to call, and it's not looking so clear. Let me put it that way. On how the year 2024 would shape out.
Issues around public debt burden in the UK, and of course the tax cut things. Many will say that government has to watch this side by side so that we don't have a repetition of some negatives that happened. For example, what happened to the bond market in 2022. Some are saying that all of this needs to be watched. What are you thinking around UK's economy now in focus?
Yeah, so the economic policymakers are also, mindful of that. And because this is also an election year, they are trying to see how to woo the electorate, at the same time not in any way causing any volatility in the economy. But it's still something that we'll see how it goes. But I don't think we're going to have the kind of flash crashes that we had in 2022. I think relatively there's some level of stability, more so that the inflation rate has been able to, they've been able to peg that relatively. I believe that there will be a lot of tweaking, with interest rates and other major capital expenses to see how that would eventually go well with the economy. But I don't foresee any major flash crashes.
Mm. Well, staying with the UK, debt is also something that is worrisome, and everyone is talking about it because almost 100% of economic output has been touched by this. Now, what sort of fiscal risk, let me ask now, are there or are you expecting, let me ask now, from government? What sort of fiscal prudency are you expecting from government moving forward?
Yeah, so there's been a lot of talk about trying to ensure that the, uh, the people have more spending purchasing power.
Yes.
That's one of the reasons why they try to cut taxes and also try to ensure that even the national insurance is also reduced, and that would give more purchasing power to the people. At the same time, too, they are trying to be more prudent. A lot of policies are beginning to spring up to ensure that there's more prudency in the economy generally. Even this issue of immigration, where they are planning to take people out of the UK to Rwanda and all that. It's all part of reducing the body on the economy, and I foresee so many other things too, whereby they will try to shift the body, that the government has been bearing, and shift it to maybe the private sectors, such that it won't have so much effect, on the cost of spending and the cost of governance. So I believe they will be able to match the two together, whereby they are able to give the populace more purchasing power and at the same time reduce the body of governance and the cost that is involved in governance.
Brilliant, as usual. But can the markets in the Middle East now, back there, Egypt, Saudi Arabia, Israel, Qatar, return to profitability when investors' confidence, well, in that region still remains weak?
Yes, so those regions are still very volatile. And of course, because oil is still a major economic resources in the world, and of course, the cost of even going into war, it's not something that is something that is to be trivialized. It's quite expensive, and some of these even nations in the Middle East, they have support and people from other power blocks in the world that are also funding some of these activities. And, the effect is going to be a ripple one, whereby it's going to boil down to the whole economy, world economy generally. So it's one of those things that I believe that has given rise to the gloomy projection, about the growth in the world economy for 2024. Those are the factors that people are looking at, that or that analysts are looking at, that as long as these things continue to continue to be in the top tier, it's not likely that the world economy generally is going to have a breathing space. And this is one of those things that I think would affect the projections for 2024, and would also affect a lot of investors from really coming out to invest, because many of them have seen that the tide and the outlook is not looking so good, and that could make many investors to just adopt a safe haven approach, or a watch and see approach, to see what happens before they put in their investments to whatever area.
Well, interesting stuff as usual. Well, let's look at the banking sector at the global level. We've seen American and European banks being preoccupied with in managing funds. But let's assume that loans repayments are impossible. Look at what's happening in China and all of that, housing funds. Wouldn't there be a global economic crisis if this happens?
I believe that most of the uh, major power blocks, they are trying to avoid that. Uh, 2023 was a bit dicey, but most economies were able to escape, from the intrigues and what would have happened in 2023. I believe that the prospect of 2024, being better is there, as long as those factors are not in place. Many economies are still, very fragile from the COVID experience. And for these economies, they are trying to build back on what was lost during the COVID era. The major power blocks in terms of um, economic decision making, in terms of how the economic movement moves, because most of these economic decisions and global impacts, you see them coming from the developing worlds like the US and Europe. They actually dictate the pace of the global economy. Now, China has been affected because of the COVID, and I don't think China is going to try to put their hand in so many things that would affect the economy currently. Uh, but when we look at it holistically, I believe that most economies will try to manage and not dabble into things that would affect them. So we might still see some level of stability generally in global economy, except we find ourselves, if the Middle East crisis gets worsened, then we might see a lot of ripple effects generally, which could affect the global economy. But if that is managed, I believe that most economies will be able to at least stay afloat and glide through the year till there's more kind of a global stability.
Any hopes for cheap funding or subsidies, let's say debt cancellations for countries like African countries, of course, African countries who are trying to manage? And what also is your take regards to movement of funds, FDIs, FPIs, across board in 2024?
All right, so a lot of economies, you will remember in 2023, courted the African continent, and many of them had one thing or the other, trying to involve the African continent in. I believe that as long as the African nation and countries in Africa are able to really get their acts together and make themselves really attractive because there's more stability kind of in Africa than other parts of the world now. And if African countries are able to really, make that kind of advantage, such that they are able to put their economies in order and attract foreign investors, that would actually give them a more better prospect of economic development, because now that the chips are down in uh, most developing economies, I mean, the focus is on developed economies, and if we're able to really get our acts together, we would attract more foreign investments, which could actually help the African continent, to become also major power blocks in the world economy. So I think it's all about being able to really get your house in order and attract direct foreign. But in terms of maybe having countries having debt forgiveness and all that, I don't think we'll see that, or maybe even having countries that are ready to give aids. It's not likely you see that so much
No
in
debt for
2024
forgiveness.
for countries. Yes, no, no, I don't think we'll see that. But if we are able to put our house together, we would be able to attract some level of foreign investments. Africa still remains, I mean, particularly Nigeria, still remains one of the countries that has a very high return on investments. But at the same time, there must be some level of stable policies that would help those investors, to be able to repatriate their funds and not to lose when it comes to forex and country risk.
Well, interesting conversation, I must say. A one-liner regarding to the challenges in Nigeria in focus now. What sort of market are you expecting this year for us? I'm talking about the stock market now.
So the market in 2023 ended globally, I think, on a good note. And Nigeria too was one of the major beneficiaries. I think we had about almost 46% year-to-date return in 2023, which is quite laudable. But at the same time, too, you need to look at the intrinsic value of those returns, and see what they're actually worth in terms of purchasing power and gains to the people from the original investment that was made. But I see some level of I would say maybe some level of stability. We might not see the kind of returns that we saw in 2023, 2024, but I think for the general economy, if the general economy itself is stable, then it's going to have a ripple effect on a more robust, where we have a more robust capital market. It's going to have that effect, on the general economy. And if the general economy itself is stable and the government are able to really put, things in place, policies in place that would that would kind of give us a lifeline in terms of economic growth and movements, towards that level where we can begin to say we have some level of economic stability. That in itself would help the entire financial markets and the capital market itself. But we might not really see the kind of return on investments or the year-to-date kind of growth that we saw in 2023. Mind you, also, it's some of those growth are also specific to certain sectors.
Yes.
Like the banking sector, had a very robust growth last year. We might not see that this year, but it's something that I think if the whole economy itself, it's overhauled and giving some lifeline and some positivity, it would have a general effect on the financial markets. Our inflation rates are still very high compared with what you have, in other parts of the world. I mean, those are areas that we need to look at: the inflation rates, the interest rates. I believe that when those things are tackled, we have a holistic positive effect on the economy.
I must thank you so much, investment and financial advisor Mr. Gbenga Ogurinola, for joining us live from the United Kingdom. We really appreciate this. To enjoy the rest of your day at work.
Thank you, Tolu.
Well, let's move there straight to discuss trading.